I need $1 million for every year after 18, at least.
These are my major indicators. C-Team SOG, and BNDX. It's a bond ETF traded on the Nasdaq, and it indicates, volatility. And what does it indicate? Volatility in the bond market, but it reflects the bond market on the upside, based on U.S. allies like Japan and Europe. So it's very closely connected with the Euro-US dollar, which is right beneath that, and that's, you can see nonstop, right? And below that you have VIXM, and pretty much that's my position in the market. Is midterm volatility. As you see, it's up 6,900s, 15 cents as of right now, and it's headed my way. And we'll go through my watch list and we'll actually see where I'm at. I acquired it, it went a little bit lower, so I have a little bit of lag there, but it's definitely on the way to catching me. At this point, I think last time I looked, let me take a look. Actually, I can't right now. I'm not having any problems with VIXM. My position is strong, and below that is oil is up. It's an anomaly, guys, and that's the truth. With supply the way it is, and where the dollar is at, crude oil should be down some. But it's super high up in price. And I'll sort of explain to you what I mean when we get into the inflation segment. And I have more on that, even though we've been on that for the past couple of segments. And the thing about it is, it's going to, be spoken about more at times, and other times it's not. So we're going into a phase where I'm not going to really be using tactics concerning inflation. So let's keep on going. Below that, I have USDCY or CNY, and that's US dollar renminbi, which is down. But market vectors, Chinese RMBI is up, but the dollar's down, right? These are things you need to watch, and this is VIX CBOE, cousin of VIXM, and everybody is bullish as far as acquiring contracts. The issue is this, really. I mean, this USD right below that. The dollar is up at 9608. So definitely the market's down today. It was lower before. There's a switch occurring, and this is really what I want to touch on. But back to VIX. Let's get started. Let me explain that right here to you guys. Group 1 trading reports a huge day of VIX trading, VVIX. Trading on the 25th of February, VVIX hit its lowest level in 2019 on Friday. It was higher at 1380, coming off of its all-time lows. Buyers started to look for long-term protection. The April 80-20 call spread bought at 150,000 times, 48, 49, and 51 cent increase. Buyers of April's verticals at 326 call spread was bought at 400,000 times, 250,000 vertical call spreads purchased in April. That's 2 months of expiration or until expiration. But if you notice, VIX here is ProShares mid-level, traded on the New York Stock Exchange. It's a COB derivative, by the way, and it reflects CBOE markets. I like the fact that the upward movement of the New York Stock Exchange can only help with taking advantage of inflation. So that's where I'm at, midterm. I don't have any complaints right now with midterm. There's the TDJ right there, and I bought it at total convergence. It's just the top chart. It's perfect convergence as I see it. And there is the MACD once again showing sort of kind of the day of trading time frame when I acquired it. So I accumulated here. Let me get this cursor to show you. I accumulated about there. It still dropped a little bit, and it's coming towards me on my way, my friends. So as we continue on, after the 23rd and before the 25th, 21.96 thousandths was my buy signal. With the support of the New York Stock Exchange, it went up with inflation. Quarter 3, quarter 1, quarter 4 shows midterm contracts are not over leveraged. With a trade deal not completed, the Fed not being clear with its wait and see approach, bottom line, my cost basis is 21.96, and the 52-week is at 27.91. If I see one hiccup, I'm out. I've covered my cost basis, no losses. Observe March last year, located in the chart below. The midterm VIX horizon is expected to be reached in March and December of 2019. No matter what's said, the deadline for the deal is March 1st. How much of the deal is debt consolidation? A majority of any trade deal with China has to be debt consolidation. There's no choice in it. What is the number one selling product that the U.S. makes? And that's debt. Currently, inflationary conditions have been a plus for investors and an issue for consumers. Last week, I saw a micro trend in the market that reinforced my thinking on my current positions in the market. The take advantage inflationary tactic strategically ended on Tuesday, February 26th. As you can see in this inflation calendar, all underlying stocks should grow at the 0.2% or 0.200% inflation rate. But what we want to know is when to take advantage of inflation and when it can be too risky to be in stocks and when people shelter in some other type of investment. Negative markets late in February is what I was waiting for. And once again, I took profits to close two positions: Sky Solar, New York Stock Exchange, and NSNC Amex. I've been feeding off of the two for about 2.5 weeks, reducing my exposure as the stock became inflated. NSNC should perform at a 0.200 rate, but the fact is I could use the liquidity in future upside trades. Let's get to what I'm talking about here. Chart at the top. Last year, the month of March was an inflationary period in 2018. We are now going into this low inflationary period. Sell signals are going to be the order of the trading sessions until the 6th of March. Afterwards, buying should resume with a huge upswing in mid to late March. The only way we won't see this dip is if the China-US trade deal makes good. We will see volumes increase to the upside. And on the other hand, if the trade deal is a no-go, we will see volumes increase to the downside. Excuse me, I need to correct that. It'll be corrected in the transcripts. I'm sticking to midterm volatility. Let me tell you what I mean. Who are the buyers if there's no sellers? Think about that. Stock buybacks. Companies will buy back their own stock. This is what they want. And I think that's sort of kind of the danger, because what if these companies are public, right? And if the companies buy back their own stock, are the companies still public? At this point, we don't have time to get into that. But the US dollar has risen 2.2% year to date. US crude oil prices have risen a negative 8.5. And I don't know why they have that. So it has risen up 8.5% during the same period, despite the strong dollar index. Dollar index is right here at 96. It's been higher lately. Yeah, that is the truth. Let's just back that up real quick. Let's take a look. Just do a month. Well, it was strong for a while. 3 months. What do you think? perspective on it by year. Oh, okay. And there you go. Makes a lot more sense. So, oil prices rose due to ongoing supply cuts, expectations of new sanctions on Iran and Venezuela, strong demand, and supply outages. Let's go back to the the chart there right in front of you. You can see that in the month of March, there is a dip in inflation. That's why I have stopped inflationary tactics, because there's not going to be much inflation. What I am going to do is take advantage of de-inflation and try to buy hard assets in the market, which are not hard assets, but companies that deal in brick and mortar, or gold and silver mining companies. Tons of places you can go. Catching it at the right time is very important. Let's go back to my there you go, guys. New gold, Amex. I was already there before all this. Let me show some light on here for you. TRNX is long for me, even though, let me take a look, it's up in extended hours. This is something I'm holding for election time. AMRH Holdings. Just to give you outlook on what I am doing. Look at that. And I just was selling today. Markets are down. DRV UDN. There you go. There you have it. That's where I'm at in the market right now. US dollar bearish. Bearish real estate. We talked about TRNX. If you want to know what they do, go back to the other video. These videos are becoming too long. AMRH Holdings. That's my banking, financial. I kept it tech. Guess what that is? Hard asset, right? So, yeah. Anyways, back to work here. This is the US dollar bearish. One of my positions you just saw. I was holding. Let's go through this MACD right here. This is a snapshot of when I bought. Most likely it was somewhere in that dip. And just sort of kind of knew things were gonna go that way. I'll show you why in a second. KDJ, big time convergence. I think I'm not even in the picture here. I mean, I bought back before this. This was a technical setup right here. There we go. The US dollar is primed for a bigger sell off, which is stock market positive. Should not be stock market negative. That's my fault. For those who are just now looking at buying the dollar at its high to take advantage of its low, too late. What do I mean by at its high? We're talking about an adverse ETF. So for those that are just watching my show, you gotta go back and check my show. I focus on making money when the market is up and down by taking advantage of the products that are out there to help me do that. So right now the dollar is sort of moving up, but still we saw where it was at. It was 96, which is not high in my book. The U.S. bearish dollar ETF is doing outstanding, but you got to remember it's times 300. This is going to have to be sold after the dollar takes a dip, which makes it hard. If you try to sell it at its high, you may lose out on profits, and that's a little strange for me to say, but you got to understand there's lag, total lag. Your stock doesn't get bought right away. Sometimes you may have to reduce the cost, make it, when you're trying to sell, you want to sell it for as much as you can. Sometimes I discount it a little bit just to give incentive for someone else to buy it. It's all marked in my cost basis, you only get paid with stocks if you sell, which I sold two today. The Sky Solar, as we read before, and last week it was at 146%, and it went down to 30. Well, what's going to happen the next day? It went up to 140. Now, a few days later, it's at 30. I sold half of it at 130%. And just rode the rest to hope it, and I missed out on the 45, but I bought it a week prior at negative 200s, so no complaints there. March, the dollar will go higher. At this point, if I see anything that interrupts the downward momentum, I'm taking the other side, man. I'm taking the other upside. So when I'm speaking to you about a paragraph, I'm actually talking about the chart. And I need, if you guys are going to listen to me and follow me, you got to understand. I'm specifically talking about me. And the effects of my account. The effects that the market have on my account. So, back to work. I'm taking the other side to take advantage of inflation. We are looking at a window of 15 to 20 days to close, to open in a bullish ETF. And this is why I like the plunge protection team, because I was holding inverse ETFs as the market's plummeting. That's the problem with inverse. Once it gets in hyperdrive, who's gonna buy it? You have to think about that. You got an adverse ETF, the market's going down. And people are looking to get out the market what you're trying to sell. Even though you're making a killing. And like I think it was in November, the real estate market was going down and I was at like 7,500% and growing. But couldn't sell it. Who's going to buy it? So you got to think practical. And people approach this with this crazy notion. This is very practical a lot of the time. Okay, what we have right here is, with that said, I have DVR, DVN right here. Adverse Inverse ETF. Right now we're looking at the 6 month. And that's half of the year's normal swings. The blue is DRV and the bottom lighter color is DRN. So pay attention what you're looking at. DRV is the inverse and it's above resistance. Get that. So overall, the past 6 months prior, real estate has been down, but you haven't been hearing that. Up until 2 months ago, real estate was doing excellent. I explain to you this stuff. This is 5 days right here. And same trend in the 5 days. Real estate is down. Now the 6 month and the 5 day, majority of the time, the real estate market was down. Just recently, it went higher, and back 6 months from today, it was higher just a little bit. Let's get to the stuff. While the strength in the retail may have added the outlook on storefronts or inventory storage as is evidence, recent optimistic quarterly outlook revision of the factors will play into either a bull or bear case for rents, which DRV is. DRN is a rent. Like every other industry, material costs carry the threat of rising import costs as symptoms of escalating global trade tensions. Canadian lumber tariffs dampen growth in residential real estate market. In the residential real estate market, other price pressures could also throw water on the retail overall sustainability through rising customer costs. And I will touch this up later. And obviously the transcripts will be posted as usual. So I will fix it up. Not too much, not bad for 1 year's growth. Knowledge, right? Okay. Now we touched on dollar. We talked about dollar. Dollar that up and down. US dollar, CNY, US dollar, EUR. Okay. Everything. What controls all that? Let's go back to the bond market. The 1 year. Okay, that's what's been on the truth test. Every 3 to 4 months, you get a sell-off, right? That's a 3 to 4 year. June and February. Sorry, January, February 02, February 1st, December 3rd. Gotta zoom in. You understand why I say every 3 to 4 months, because that's when something matures. You gotta do your math to figure that one out. 52-week cycle, right? Bonds are the same way. Everybody's bond doesn't mature at, if I buy $1 million in bonds, they all don't have different maturity dates, right? That's not how this works. Anyways, so that's exactly what you're looking at, is buying and selling in the bonds. So there you have it. That's within, what are we looking at, 6 months. So basically, the end of March, you'll have a big sell-off. What does that indicate? Or not big, depending on what was issued 3-4 years ago. Done with this, but I'm not. So we're basically gonna see the bond market slow down a little bit. It's definitely what this looks like, and I would probably want to end this segment on this note. A nice snapshot into what's going on. I hope anything else to leave you guys with? That's about it. I mean, be conscious of these factors, and this summarize. I don't hope this has been informational. I know it's been. I don't do shows on a regular schedule. I do shows before or actionary or reactionary. Either way. I was prepared for what happened today. Been looking forward to it. I wanted to see how well my account would stand up. It did what it was designed to do. Definitely wasn't looking to end in a strategy. I let the market tell me what to do, and so everything I do is pre-preparatory for something else to occur. And I'm ready for another change if the market swings totally to the downside. Just because the stock market is down doesn't mean that the overall trend is down. I know sometimes it may get confusing what I'm talking about, but it could still be in an upward. It could be going up and still be in a downward trend. So So at this point, we are in a downward, upward, downward trend. If you actually get that, meaning the market overall is not what it did in 2018 yet. Not exactly, but it is behaving like 2018. So the lows are lower, and what we're betting on is the other side, that the highs will be even higher later in the year. And this chart is so this inflation chart right here is so very helpful in helping you actually gauge that. As you can see, just like this is what happened in the beginning part of the year. Couldn't touch January's highs all year. As inflation goes, but when everything's inflated, your stock goes up. Then it comes down. So that's sort of key to the puzzle. When it's coming down,